Welcome back, guys. We are here again with another video, and in today's video I'm breaking down a second back-to-back A plus forever model trade breakdown. And I can say this right now, this week was just such a fresh and much needed week in regards to the delivery that we've had compared to the past. And everything that I'm about to show you was anticipated beforehand. It was all pre-planned the day before, and just such an easy read in regards to price action, showcasing an amazing completion of a market maker buy model that we finally completed today on the NASDAQ. If you watched the video yesterday, please go back, watch that video, because today is the reaccumulation stage of the final completion of the market maker buy model on the NASDAQ. And I'm really excited to showcase the entire top-down analysis yet again, and just keep on showcasing to you guys how simple reading price truly can be when you tie in a higher time frame perspective to an intermediate term and then a short term execution. And the beauty about all of this sort of stuff is every single trade that I'm taking is a copy and paste format from the one prior. There's no new steps, there's no new mechanics as to how I'm executing. Every single trade that I'm taking looks exactly the same. And that is how you teach, and that is how you show somebody the true meaning of perfect price delivery and execution. So let's hop into the charts and I'll break everything top down. All right, so guys, on the charts, if you watched yesterday's video, well, we're gonna do the same thing, but kind of restart because this is a new trade. It's a new day. And if you watched yesterday's video, you know what our draw on liquidity was. Our draw on liquidity was 21,562. This daily external range liquidity draw from this daily internal range liquidity tag. And what did this internal range liquidity pool have? SMT divergence at the tag with the Dow Jones. Notice how I don't have the S&P next to this because there's no SMT between the NASDAQ and the S&P 500. So everything this week was derived from a comparison between the NASDAQ and the Dow Jones. Now you guys are asking me, Matt, you've never used the Dow. Why are you using it now? I'm using it because when we don't have SMT divergence set in on a higher time frame perspective between our two correlated main pairs, the S&P 500 and the NASDAQ, I'm going to use the Dow Jones just to check to see if structure is giving us a good reaction from a certain key level. I'm going to use that third asset to see if there's a cracking correlation that is allowing price to drive higher. And the reason why price drove higher in this sort of scenario was because of the SMT that was set in at this daily gap with the Dow Jones. And if I wasn't looking at the Dow, I never would have caught this trade, neither would I have given it any sort of attention. So if I don't have SMT between the NASDAQ and the S&P 500, I'm going to use the Dow. Now in this entire up move from our previous week getting to this resting high, I was able to catch two trades en route to that relative equal high draw on liquidity. And we're going to go over today's trade that I took on the NASDAQ. Now, before I drop down to the hourly chart, I wanted to show you guys the 4-hour chart as to what we were actually using to map out the bias moving into the day. Because the previous day, what we had going into the start of the week on Tuesday, we had price giving us bullish structure in regards to an indication of price wanting to go higher to this relative equal high draw. We had price expand higher, close above this down close candle that ran the short-term low. So this was a bullish order block that we could utilize for longs, and our first sentiment to believe that this was a change in state of delivery and for price to go higher. And then at this point was when we caught that trade from this SMT set in at these lows inside of this 4-hour gap here, and you compare these relative lows between the NASDAQ and the Dow Jones. You can see the NASDAQ made a higher low resting here, while the Dow Jones made a lower low inside and at the tag of this 4-hour bullish fair value gap resting right here. So that is how we derived our first trade from yesterday. Now moving into today, I will also say this. You want to have your plan for the day mapped out before the morning. Like I had this exact scenario, price dropping down into this 4-hour gap and then trading higher to these relative equal highs already sent to my Discord group the night before, because we had a closure strong at previous day, just like this. Now, if we're looking and framing a market maker buy model, how are we framing it? we have a smart money reversal at the tag of a higher time frame P level. Then we have a low risk buy at the first PD area that is formed after the smart money reversal. Then we have accumulation stages, like we have listed here at this SMT divergence. Then we have reaccumulation stage at another PD array or gap that is in line en route to our relative equal high draw on liquidity. So I'm pretty much just framing my stages of the market maker buy model because I know that this is our original consolidation high and we're going to end up reaching that. This was where we derived our initial long position where I wanted to frame to get price to those relative equal highs. So I didn't need to wake up in the morning and scramble as to what I wanted to do. I already knew what I wanted to do the night before. So I came into the trading day with a level head. So here's our hourly chart with the NASDAQ on the left and the Dow Jones on the right. Now this vertical line here is the 9 o'clock candle that signifies when equities open happens. And if you guys don't already know this, I'm never looking for trades on indices before 9:30. I always want 9:30 to come in and either give us a distribution higher or a manipulation lower to give me an idea as to where is there a potential Judas swing or where is the fake move to when we can see the real move. So what I did was I waited for that 9:30 to come in. So let's drop down to the 5-minute chart and see what actually happens when 9:30 comes in between these two assets. And I'm going to mark off both of these hourly gaps on NQ and the Dow Jones. So here's the 5-minute chart between the NASDAQ and the Dow Jones. Now, all I'm gonna do here is I'm gonna play out price and I'm gonna show you exactly what happens. This low resting right here is the hourly gap between the NASDAQ, and this low here is the hourly gap between the Dow Jones. So all we're waiting for here is one of them to tag the gap and then create SMT between the correlated pair. So I'm going to play out price on the next 5-minute candle. Boom, we get a tag on the Dow Jones, but we get a failure to tag it on the NASDAQ. So in this point in price, I'm going to utilize my Forever Model indicator, toggle that on, and see what could potentially happen from here on, because this is when my indicator actually alerted to me that we had a potential 1 hour to M5 setup on this exact trade. Now, for the people that have my indicator, I want you to do this and go to the settings tab of it. And what I did was, because a lot of you have this as an auto SMT detection, and the auto SMT detection on the indicator is linked to the S&P 500. So I turned that off and I put in the Dow Jones for myself because the S&P 500 also did not tag that hourly gap, but the Dow Jones did. That was the SMT given. So at this point in price, all I need to wait for is the indicator to pop up a setup for me to take a trade. Now let's watch and see what happens when price actually gives me a potential move for us to then capitalize on. So this dashed line is the 9:30 opening bell, and already you could see something potentially brewing here. Now I want you to pause the video before I click and just let me know where is the actual candle that we need closing above for us to then actually capitalize on this trade. So pause the video now before I show what actually pops up on the annotations. So boom, what does 9:30 do? 9:30, we have a sweep of the low resting here. This down close candle at 9:20 is the down close candle that sweeps the short-term lows, that also creates this SMT at these resting lows between the Dow and the NASDAQ. So if we have our indicator plotted and we have our SMT detection off, we know that if price comes into this order block, we have our Forever Model execution for us to then take the trade long. Now, all I need to do here from this point on is put my buy limit at that down close candle resting right there. I put my stop loss at the resting low that has just relatively hovering right above that SMT placed at the hourly gap failure to tag, and I'm looking to target a 1 to 2 risk to reward, or basically 1 to 211, with the relative equal highs being that draw. Now watch exactly what happens when price gets to this next candle that tags us in. I clear off all of these drawings, delete everything, remove everything. What do we have? We have the indicator plotting everything that it did for us. I'm going to remap the long position and the trigger tool right here We have our SMT set right here. We have our take profit set in at the daily external range highs right here, just for about 50 points. And we have the hourly gap also dragged out, as you can see, resting right here with our failure to tag it. So right here, I'm in the trade and I alerted it to my Discord, and look what happens. The next 5-minute candle, boom, I'm out. This trade was one of the quickest trades I think I've ever taken within the span of less than 10 minutes. I think it was a 6-minute trade. And it was all automatically implemented and plotted on my charts from my Forever Model indicator. This was an A+ picture perfect setup with a clear higher time frame draw in a reaccumulation stage of a market maker buy model. This was so unbelievably clean, and this is a true definition of what low resistance liquidity looks like and capitalizing on those silver bullet reaccumulation stages of a market maker buy model. This trade looks exactly like the trade that we took yesterday from just a different perspective, and yesterday's trade was still a fast moving paced position. This trade was just a shorter target because we were so close to that original consolidation daily external range draw. But the whole process is exactly the same. SMT divergence at or inside of the tag of a fair value gap. Down close candle that runs short-term lows. Close above it, change in state of delivery, order block, tag in, buy exactly when price retraces into the opening price, and then target a 1 to 2 risk to reward from that position. Everything that I'm doing here is a copy and paste mechanism and strategy. It's so mechanical, it's so simple, and you could easily copy this and make so much fucking money from it. Now, I hope this was a wow factor for you, and this trade and the trade yesterday was definitely just a nice breath of fresh air from the market failing to provide clean moves and finally providing back-to-back A+ trade setups. I want you guys to go back test this, journal this, just save it, and just follow the process because it really just does not get easier than this. Everything that I'm doing here replicates, and every single trade looks identical to the previous. Nothing looks different. There's no different steps. Everything is the same. Fair value gap, SMT, change in state of delivery, order block, execute, 1 to 2 risk to reward. It does not get simpler than that. Now, if you are interested in the Forever Model Indicator, I'll leave a link in the description of the video. And if you also want to trade with me live for 7 days free, I'll also leave a link for that in the description too. But I hope you're learning. I hope you're implementing my Forever Model because it really is the most simplistic way to view price delivery. But like always, guys, be safe. Good luck, good trading for the rest of the week. And I'll see you again next time for the next upload.